Hello, my name is Mohammed Jafri, and today I'll be presenting my QuickBooks Online review. And today we'll be talking about QuickBooks Online. So, first of all, what is QuickBooks itself? QuickBooks Online is an accounting software that was built by Intuit. Now, the software is mostly used by small to medium-sized businesses to manage their finances and bookkeeping. And the benefits of using QuickBooks Online is that users can access the application from anywhere and any device. So, for example, if you're a small business owner, you don't have to worry about writing down everything on a paper whenever you do a transaction. Instead, you can carry QuickBooks Online with you in your phone, your laptop, and your tablets. And since it's online, it has a good user interface, so you would never have any sort of confusion when knowing where to record any sort of transactions or sales. Besides that, we'll be looking over the list of features in QuickBooks Online, the details of those features. I'll be describing 15 of the features that I personally enjoyed throughout the semester, and I had the chance of experimenting on them, so yeah. And then we'll be looking at the references and citations used for this presentation. So the 15 features, as you can see on the slide, are from adding customers to suppliers, expenses, bills, credit memos, delayed charges, credit card transactions, and so forth. So let's start off with our first feature, adding customers. This feature comes from Chapter 3, Customers and Sales Part 1. So customers are one of the most important elements in QuickBooks. As you know, it's the foundation of your business. Without customers, there would be no business itself. So how does QuickBooks benefit the users from adding customers? Well, the time management is better management as users don't have to keep like an existing record of customers. They can easily record the customers that have been frequently coming to their shops instead of writing them down each time. It organizes sales and each customer invoice is tracked automatically, so you don't have to worry about going and backtracking through a million pieces of paper. It also helps generate accurate invoices and receipts, which reduce the chances of error. And as you know, in the manual papers, whenever you try recording a customer's sales, usually there's a lot of errors. Sometimes you get the customer's name wrong. Sometimes you can't figure out the proper amount you wrote down. There's like a lot of confusions, but in QuickBooks, you can easily go through and backtrack itself. So how do you add customers in QuickBooks? Simply, step one, you have to click on sales. Step two is click customers. Then you select new customers and then you enter the customer information. So as for it, I will be demonstrating it on my QuickBooks application. So first step of this is to click on sales. Then go down to customers, select customers, and then press on new customer. Then over here, you can add all of their names, the company name, the customer display name, which you want on the records itself, the email, phone numbers, and so forth. You can even add their addresses, billing address, and even extra notes if you want to attach any sort of payment that they made or you are supposed to pay them or not. Frankly, this is one of the most important elements of QuickBooks Online, so knowing it will be essential for any new user. The second feature I enjoyed of QuickBooks is products and services. Same from Chapter 3, products and services are a huge part of QuickBooks, and these are the items that you basically sell to your customers. Now, there are four types of products and services when you go onto QuickBooks Online. There's inventory, non-inventory, services, and bundles. Inventories are basically items that you buy and sell and keep a track of their quantities. Non-inventories are inventory, but you don't keep a stock of. So, for example, office supplies, things that you really don't that you can't really keep a track of. Um, Services are what you provide to the customer. So instead of items that you buy and sell, there are services. For example, a lawyer can provide their legal consulting abilities or features. And then fourthly, the bundle. Now, the bundle is a collection of products and services which are grouped together and sold together to various customers itself. Now, what is the benefit of adding products and services? Well, it automatically tracks levels of for inventory and alerts when the stock is low. So instead of going every single day and recording how much inventory you have left, QuickBooks will automatically inform you when the stock is low so that you can easily move accordingly. It is easy to record inventory and it saves a lot of time for users. So you don't have to continuously grab a piece of paper and just write down each inventory name and the quantity that there is. QuickBooks will record that for you and you can easily maintain access over there as well. And since each product and service is linked to accounts, it maintains the accuracy in financial reporting. So how do you add products and services in QuickBooks? Well, simply, step one is to click on Sales, step two is to click on New, and step three is to choose which product and service you need. Now, a small note here is that services might need more information to enter. So I'll demonstrate on my QuickBooks that how we can add products and services. So for example, you can go on Sales, you can click on Products and Services, then you can click on New, and you can choose between the four options that are provided: services, non-inventory items, bundles, and so forth. So as you can see, when I click on an inventory item, it will give me a form that I have to fill out. So for example, the basic information: what is the name of the item? What category does it come under? The initial quantity on hand, the reorder points. So for example, at a certain limit, at a certain limit of the inventory itself, it will tell us that which point of inventory does QuickBooks have to inform us. So for example, if I have a certain amount of quantity, so for example, if I have 20 pieces of a certain item, I can keep my reorder point at 5. So when it reaches 5, QuickBooks can inform me that, yeah, you have to refill your inventory itself. Otherwise, in that, there are sales, so you can write down the description, how much you sold, the price and rate of the item itself, the income account, and the sales tax which will be needed. And then the purchasing the description, which is the basically just put the description, the cost, and the tax as well, and the supplier. So that was products and services. Moving on to our third item, sales. So sales is probably one of the biggest elements of this chapter 3, and it refers to basically when you sell a product or service and to a customer. And there are two ways to basically record sales. There are invoices and there are sales receipts. Invoices is when you bill a customer who will pay you back later. So you're not getting the money immediately. Instead, you're just getting a piece of paper that says that the sale has been made and the customer will pay you back later. Sales receipt, on the other hand, is when a customer pays you immediately on the spot. So you don't have to go to the hassle of expecting them to pay you later. The benefits of entering sales in QuickBooks Online is that, again, it speeds up the sales entry, so it saves time for users to do other things in the business itself. So you don't have to spend time writing down on a piece of paper the same information. You can go on QuickBooks, you can just type in the details, and it will record itself. Because of its simple tax calculations, QuickBooks can apply the correct tax rate, so you don't have to be confused on which tax rate you should be using on. I know a lot of businesses that are have multiple branches throughout Canada. So, for example, a certain branch can have multiple branches in Ontario, some can have in Montreal, and then so forth. So there are different tax systems. So with QuickBooks, you can easily implement the tax calculations, and there won't be an issue with that. Finally, the benefit of entering sales is that it improves cash flow management. So we're going to be looking at two methods here: how to create invoices and how to create a sales receipt. To create an invoice, you have to click new and select an invoice, and then you have to fill out the information. So as for it, we'll go on QuickBooks, we will press on new, and we will press on invoice. As you can see, there's the invoice number, You can select your customers from the list. So for example, I choose Adam Rick, and you can add the customer's email, so they will get the information. As you can see, because this customer was logged in, you can see that the billing address, the invoice date, and the due date have been written. As for the products and sales, you can choose the product of sales, or you can add a new product or a new service. You can write the descriptions, the quantity that you sold, the rate, and the amount plus the tax rate. And below, you can add any sort of messages on the invoice you would like, the statements. So for example, if you give a customer a written statement that says that the invoice has been done, you can attach it in QuickBooks Online for your own references. The second way to record sales is through a sales receipt. Now for sales receipt, we will follow the same pattern as an invoice. So we'll have to click on new and then click on sales receipt, then fill out all the information. So we click on new, click on sales receipt, and then we can choose a customer. I'll choose Alma Jones. There's Alma Jones' billing address since we already recorded the customer previously. The sales receipt date, the payment method. So in this case, if the customer is paying by cash, you can write down cash. If he's paying by check, credit card, debit card, anything. The reference number, which would be, now the reference number is important as, the sales receipt number is important as when there's a huge amount of sales receipts, their sales receipt number makes it easier to track down which customer and like which transaction was made. And you can deposit it to any sort of, and the easier thing about QuickBooks is that you can easily deposit the funds to any of these your options. So for example, if you're using a bank, you can deposit to a bank. If you have like a credit, if you have an account somewhere else, you can do it there. You can do it into a current asset and so forth. Here you can choose any sort of product and services you need to attach, the description, the quantity, the rate, and tax. And that is sales. That is basically entering sales as a whole. So moving forward, we'll go to the next chapter, which is chapter 4, suppliers, and expenses. And within this chapter, we'll be looking at adding suppliers as a main part of QuickBooks itself. So what is adding suppliers basically? Adding suppliers is the opposite of making sales. So instead of customers buying from you, you're buying from the suppliers. So it's a reverse basically. Adding suppliers basically means that you're creating a profile for each company or individual and from where your business buys the goods and services from. The benefits of adding the suppliers is that it's easy to track what you owe to each supplier and when the payment is due. And this basically helps maintain good connections or like good reputation with the supplier itself. So instead of manual work where you're just writing down the suppliers, so for example, you owe $300 to a certain supplier, you forget that the due date is coming up and the due date is gone. So that just shows a bad image of yourself. QuickBooks, on the other hand, will inform you when the payments are due, and so you can easily make the payment itself and have a speedy process itself. Second benefit of QuickBooks adding suppliers is that it helps schedule payments based on time gaps. So for example, due in 30 days, again, it avoids late fees for any sort of users, so you don't have to worry about late fees or any sort of issues itself. And each transaction with a supplier is easily searchable, which supports auditing or analysis time. So, for example, if ever your company is under analysis or like whenever there's consultants looking through your records, they can easily see which transaction relates to which supplier, which makes it easy to search. So how do you add suppliers? Well, the 3 steps to add suppliers is to click expenses, click suppliers, and select new suppliers. So as per this, I will go onto here, click expenses, go to suppliers, and then you can add a new supplier. Over here, you can add the company name, the supplier display name, the first name, last name, the email, phone number, and mobile fax and whatever. You can even add the addresses, so where you're going to be billing the stuff itself. In notes, you can attach attachments. So for example, if you bought something from a supplier, you can attach it in here for reference. And for additional information, you can add the taxes slip, so the T4A slip or the T5018 slip. You can add what supplier this is. So if it's an individual or if it's a business, the business's ID, social insurance number, the billing hour, the payments, so how you're paying it and if it's due on receipt or not, and the expense category. So if it's advertising, is it bad debts, is it bank charges, commissions, or whatnot. That was the first feature of this chapter. The second feature is entering expenses. When entering expenses, we need to know what expenses is. So in general, expenses just refers to the money that your business spends on operating. So for example, if you own a factory, the rent of that factory would be your expense. The utilities, the water, the electricity bills, that would be your expenses. And the benefits of recording expenses in QuickBooks is that the expenses are posted to the correct accounts, which ensure that your income and expenses are posted properly in your reports. So when you're generating your income and loss statements, since the expenses will be posted correctly, you can easily see that. Besides that, there's a consistent expense tracking, which helps users compare actual spending to budgets. So for example, if you have a certain budget for expenses, let's say $10,000, and you see that your factory's expenses exceed that 10,000, then you can easily act upon that how you need to handle that. So how do you add expenses? Adding expenses are basically only two steps. So you click on new and select expenses, and then you enter all the information in the sheet. Now here's another note to make. Now there'll be two options of recording tax, exclusive and inclusive of tax. As you can see on the right side, there is a small image which shows a bit more detail. So it shows what pay on the expense window, it shows the checking account, the payment date, and the and how to add new payment method. So as for it, I'll be demonstrating how to add expenses. So as we already are in the expenses tab, you can click on expenses and we can click on new transaction. Over here, you can basically see which, what do you call it? Oh, my apologies. For expenses, we click on new and then we click on expenses in the suppliers tab. And then you can add here the pay. So for example, Bob's Big Boulders would be my expenses self. And as you can see, I have been experimenting. So the categories are here. There's subcontracts, there's freight. I've put the amount that there is, the sales tax. And since there's no descriptions, you can either put this description if you want. As for the payment amount, there are multiple payment amounts. So if you want to pay with bank, that is your choice. If you want to pay with a credit card, if you want to pay with inventory assets, prepaid, or even undeposited funds. Then again, you have your reference number, which you can use to track the expense anytime you are backtracking or if you are going for an audit. And then the note here was that there is two options. So you can either do exclusive of tax, inclusive tax, or the third option is out of scope of tax. And you can also add attachments if you want to show that the water bill, how much did you come at that time. The next feature in QuickBooks is entering checks. Now, when it comes to entering checks, um, checks is basically a payment that is made to a vendor, to an employee, or any other payee. And this is usually when you manually write a physical check and then you want to log it into your records. So usually you see that if you don't have the funds right now, or if there's a huge amount of funds which you currently don't have in cash, You usually write down on a check and give it to your supplier, to your customer, or to your other payer. And the benefits of entering checks is that since every check is linked to a pay and categorized, it makes it easy to review and report on spending. So, for example, whenever we're entering checks, you can easily link it to any sort of pay, so like a customer or a business, and it can be easily reviewed or report on spending itself. Second benefit is that by recording checks properly, you can check if a payment has already been made before writing another. And this is kind of important since it saves time and it ensures to both sides that the payment has went through or not. The third benefit is that it keeps a historical record of the check numbers, dates, and amounts to help with reconciliation. So when reconciliation time comes, you don't have to worry about going through 1,000 checks itself. As you know, in back then before QuickBooks was made, whenever you had multiple checks, going back through them and comparing numbers was quite of a hassle, and sometimes they even got lost. With QuickBooks, you can easily look at the check numbers, the dates, and the amounts, and so that just saves time for the user and that can and basically stops or like prevents confusion from occurring. So how do you enter checks? To enter checks, click on the New tab and click on Check, and then enter information such as the check number, the pay, bank account, and all other information, so forth. So over here, we can click on New, we can click on Check, and then we can add who do we want to pay to. So for example, I will add City of Mississauga. Now, after City of Mississauga, we can see that their mailing address is here, and we can choose which bank account we need to enter. So for now, I have put big bank checking, and as you can see, there's a balance over here, and your balance can vary on your business itself. Then your check number, which is important to record as later on if there's an audit or if you are just backtracking on your records, having that check number is important as you can verify where that check went. You can choose the category. So for example, if it's bank charges, commission fees, or disposal fees, the description, the amount, and the sales tax. Other details you can put as well. So for example, you can put the product and service that you bought, um, or the product or service that you are basically paying for. The memo and the attachments you can add as well. So the next feature in QuickBooks Online is entering bills. As you know, bills is basically when you receive an invoice for goods and services that your business has received, but the bill has not been paid yet. So you received it, but it hasn't paid yet. What are the benefits of entering bills? Well, it helps you see all the unpaid bills at one place, including due dates and amounts. It's easy to pay as you don't have to re-enter the details. Each bill is linked to a vendor profile, which makes it easier to view their purchasing history and so forth. Now, how to add a bill? To add bills, you have to click on New and select Bills and enter all the information in the sheet itself. So forth. We go into New, we click on Bill, and we can choose a supplier to pay. So for example, I will choose Facebook as my supplier. And on terms, you can choose anything. For example, I choose due on received, the bill number, the category itself. So if it's an advertising, the details, this is advertising. This is for advertising expenses or something. The amount of the bill. So let's say it's $100, and the sales tax, which we would be using HST Ontario, which is the 13% tax for Ontario state. Then the item details, for example, what was the product or services? So I will say it's a disposal of fees. For descriptions, we can write description, or we can just write NA just to describe it. the quantity, the rate, and the sales tax itself. And as you can see, because QuickBooks calculates the tax itself, it included the tax of $13 into the 100, which makes it $113. And you can save 1 minute. So you can save the amount and click on new, which would save the entire bill itself. Now, on the other hand, while we have discussed about entering bills, let's talk about paying the bills. Paying the bills basically means that you're recording the payment of bills that you entered for goods or services received from vendors. And the benefit of paying bills from QuickBooks is that QuickBooks prevents you from accidentally paying the bill twice. So, for example, if you have paid the same bill to Facebook of $100 twice, it would be kind of confusing as you basically just paid $200, but you are not aware of it. And it helps in clearing any sort of confusion relating to the bills that users need to pay. Second benefit is that because it's a timely payments, because like timely payments help you maintain good standings with suppliers and can lead to good credit and discounts. So by paying on time with bills, and QuickBooks will remind you when your bills are due. So for example, if your bill is due on like after 15 days, it will remind you a few days beforehand or whenever you set it that you have to pay this bill before this date, which is helpful as it prevents from any sort of bad debt or any sort of delayed charges. So how do you pay your bills? To pay your bills, you have to click on New and select Pay Bills. Choose from the payment account, select the bills to pay in the left-hand column, and enter the payment amount as for. So I'll show you here. So over here, you can click on New. You can click on Pay Bills. And you can see due today is Facebook. So we can select Facebook as our payee. And here's the option we can choose. So whether we can pay the bill all together or if we can pay a certain amount. So if I only pay $50 out of the bill, and if I save it, then it will basically show you a sort of issues itself. But yeah, this is how you can pay your bills itself. Credit memos. So that will be the final feature that I liked from chapter 4. Now we move on to chapter 7. Chapter 7 is basically credit, customers, and sales part 2. So we'll be focusing on the other aspects of customer and sales. The first feature I liked about this chapter was credit memos. So what are credit memos itself? Well, credit memos is a document that you issue to your customer when you need to reduce the amount they owe to you. So what are the benefits of credit memo itself? Well, credit memos offer timely credits or refunds, which build trust and maintains good client relationships. So by issuing credit memos, you're basically building trust and maintaining good relationships with your customers. Credit memos reduce the amount a customer owes, so keeping your accounts receivable accurate. So when, for example, you get a statement or you're making a statement, you don't need to worry about how much your customer owes, and keeping your accounts receivable accurate. As in manual, when you're basically recording accounts receivable, sometimes you make errors. It's common to know in accounting that there are errors when it comes to manual um, recording. But with QuickBooks, you can easily record how much your customer owes, and that keeps your statements pretty clean. Thirdly, it provides a proper accounting record when goods and services are returned, so that's helpful. Now, how can you add a credit memo? So for adding credit memos, you have to click on New, select Credit Memos, fill out the form. Step 3 is click on Receive Payment, enter the name of the customer, select the outstanding invoices to apply to the credit against, and select the credits to apply. So forth. I'll demonstrate. So we click on New, We click on credit memo. We can choose a customer to basically give the credit memo to. So I'll choose Daniel Jackson. As you can see, Daniel Jackson's billing address is here. The credit memo date is here. And then we can go ahead with the product or services. So in this case, I will choose flower planting. As you can see, the quantity and rate is already been applied when I added the product or service. The sales tax, which is Ontario's HST, and then we can basically save and send. So as you can see, we need to put put an email. So I'll just make up an email, Daniel Jackson @gmail.com, and then we can save and send. So as you can see, when you're creating a credit memo, you can send a similar email to Daniel Jackson. And as you can see on the right-hand side, there's a PDF of the credit memo itself, which makes it very helpful as the customers given the credit memo in person, like, online, and they're also informed that there is a certain credit memo on that day. So you can see you can send and close and so forth. The next feature that I liked about Chapter 7 was refund receipts. What is a refund receipt? Well, refund receipt is basically used when you return money to a customer who already has paid you. The benefits of a refund receipt is that it shows an instant return of funds, which helps both sides have a feeling of relief. So basically, when you're sending the refund receipt, you have that feeling that the other, like, when you see the instant return of funds, it gives that that relief to both sides that the money has went through and there won't be any sort of complications. The second benefit is that each refund receipt is logged with a reference number, a date, which is helpful during audits or reviews. Again, similar to previous points, when you're backtracking or when you are basically in an audit, having the refund receipt logged in with a reference number and date, which QuickBooks requires, is helpful as you can easily track through and find out where your refund receipt is. So how do you add a refund? How do you add a refund receipt? So step one is to click on the new menu and then click on refund receipt, complete the information required in the sheet, and click save. So as for it, I'll show. So click new, click on refund receipt. As you can see, I can choose any sort of customer. So I'll choose Dennis Bergen. As you can see, Dennis Bergen has his email, his billing address written right here. The payment method depends. So for example, we'll choose cash and refund from big bank checking, or inventory asset for now. Then we can choose the product or service. I'll choose monthly snow removal, which includes driveways, patios, and so it's just an example. The rate is 250, so, and all the tax is already applied, so we have a total amount of refunded $282.50. And we can save it, and the refund successfully has been issued to Dennis. And that is how you can do a refund receipt. Moving onwards to the final feature that I liked about Chapter 7 was delayed charges. So what is a delayed charge? Delayed charge is a non-posting transaction which is used to plan a future charge to a customer that you have not invoiced or billed them for. So basically, it is a reminder that a charge will be added later to an invoice. Now, what is the benefits of delayed charges? The benefit is that it keeps track of services and products before you invoice to the customer, so nothing gets missed out of the equation itself. And you can enter charges as work is completed and bill everything later as one organized invoice. So there's no need to send like in multiple invoices itself, just to indicate that this is the delayed charge, this is the normal invoice, and whatnot. And the delayed charge will not affect income or accounts receivable until you invoice it. So there's no effect that will be on your accounts receivable payment account. So if you have to issue a statement beforehand, there won't be that charge itself. Or if you have a statement later, it will be there either way. So how do you create a delayed charge? So you have to click on the new tab and click delayed charge, complete the form, and repeat the process for each additional charge. So I'll show you over here. So over here, we can go on to new. We can go on to delayed charge. And here we can choose any customer. So for example, I'll choose Elizabeth Barker. I will select a product and service. So for example, I will choose the one-time snow removal. There's the rate, there's the quantity, and there's the tax. And then here is the delayed charge number 1. So this is the first delayed charge. The amounts are exclusive of tax. So if we do inclusive, they will add the tax itself. If we do exclusive, it will exclude the tax. There's the memo and the attachments if you want to add anything. So we will save and send this one. As you can see, the delayed charge has been saved. And so it will apply when we send the invoice. So that concludes chapter 7. Moving on to the next chapter, which is chapter 8. Now, for chapter 8, I specifically enjoyed the segment of credit card transactions, and I feel that this is my favorite part of chapter 8 itself. So, what is a credit card transaction? As we all know, credit card transactions are basically very normal these days. They refer to any business expense or purchases made using a credit card. So when you're paying your bills or when you're just shop or when your business is basically doing or purchasing any sort of supplies, you can use a credit card to pay for them. You can either manually enter these transactions or report them automatically by connecting your credit card to the account into QuickBooks. So you can either use your credit card manually, so like you can enter the transactions over there, or you can connect your credit card into QuickBooks. For now, since we are just on the learning scale, I will not be connecting my credit card itself. Um, how do you so how to do a credit card transaction? The step 1 is to click new and select expenses, select supplier to pay, select the credit card as a payment method. Now there are two ways. Now there are two methods in this chapter in this segment where it's how to do a credit card transaction and how to pay your credit card. So as you know, monthly we usually get our credit card statement. So how do you pay that off, and how do you pay it off in QuickBooks? I'll first show how to do the credit card transactions. So as forward, we will go on to new and select expenses. On the expenses, we will choose our payee. So for example, I will choose Google as my supplier. And as you can see in the payment amount, in the payment account, you can see that there are multiple options, but there is a credit card. So there's a Visa card. We can select that. As you can see, it has a balance of $664. The payment we can select as credit card, reference number, and we could put the category detail as, let's say it is just disposal fees. So we'll just say this is a disposal fees. The amount, so for example, we will do $50, and the sales tax, which is HST onto a 13%. We will include the tax, and we can just save and close. So as you can see, the expense of $56.50 have been saved into and has been paid by our credit card. The second method in credit card transactions is how to pay your credit card. So to pay your credit card, you have to click on new, select pay down to credit card, and choose amount to pay. So we click on new, we click on pay down credit card on the others taskbar. And we can select what credit card we want to pay. So for example, we will pay the Visa card. The pay is optional, so you don't need to choose a pay itself. How much did you pay? So we will select, let's say $3 again, date of payment, and what did you use to make this payment? You can choose if you have made the payment with a check or not, or you can even add the memos itself. You can select on save, and you can say you successfully recorded a payment of $50 on your credit card balance. So that is the only feature from chapter 8. Now moving on to chapter 10 and our final chapter, inventory. Actually, I think second last. So yeah. Um, so in inventory, I had three elements and features which I enjoyed. The first one being setting up inventory. So what does inventory relate to? Well, inventory basically refers to the products you buy or resell. And so QuickBook tracks inventory items in real time, and they update quantities, the cost of goods sold, and the inventory asset account every time you buy and sell. So the good thing about inventory in QuickBooks is that in real life, as you know, recording down inventory can be a tedious task, and going through every single item and recording them can be difficult, and keeping track of those items is also difficult as well. That's where QuickBooks comes in handy. And QuickBooks basically updates inventory levels every time you sell or restock items, which makes it easier for users not to enter manually. And a good benefit of QuickBooks in inventory is that it basically alerts the user when the inventory drops to the reorder point. So as you know from the previous slides, talking about reorder point. So for example, if I have 20 quantity of a certain item, and I put the reorder point at 5. So when it reaches that point, it can QuickBooks will alert the user that this certain item is falling short and to restock it immediately. Now, how do you set up inventory? To set up inventory, click on New and select Item. Enter the name of the item and enter in all other informations from the inventory form. So as per our show, so we go on to QuickBooks, we press New, we go on to Inventory, we go on to Inventory, and so we basically just type in the inventory itself, the product variant, and the reference number itself. So yeah, that's how we do the inventory itself. One of the best things about inventory in QuickBooks, and I think this is one of my favorite features, is that you can basically it gives the user the information that whenever something is going low or not, which in my opinion is needed in the real world. But yeah. Um, so let's go on to our next method, which is QuickBooks Bundle. So this is one method. Now, I would like to revert our mind back to chapter 3, where we spoke about these 4 items, which were about products and services. We spoke about there were actually 4 items: inventory, non-inventory, service, and bundles. So the bundle part of this is what we're going to be focusing on currently. For bundles, it's a simple method where what is a bundle basically? A bundle basically means that it's a group of products and services that you sell together as a package. So for example, let's say that you are giving a certain product, and then with that product, you're giving another product itself. So for example, with shampoo, you're giving conditioner, or with a laptop, you're giving a free bag itself. Or for example, when it comes to a bundle of products and services, so whenever you go to buy a laptop, the employee can tell you, oh, with the laptop, you have a 1 year of repair free. So like if your laptop gets damaged or if there's any sort of issues, you can bring it in and they'll fix it for you. So that's a service, and they're also getting a product as well. What are the benefits? So what is the benefit of a bundle itself? So you can quickly add multiple items to the invoice or estimates with one selection, which saves time for users. So, for example, you don't have to record that you sold a bag separately and then a laptop separately as well. You can add them as one item itself. Um, and it makes it easier to track items for certain customers. And then you can also create discounts on bundles to offer more products and services at once, which increases sales. So, for example, um, if you buy more of a certain item, the shop will provide you a certain discount, which encourages more customers to buy more, and that increases sales for the overall business. So, how do you create a QuickBooks bundle? To create a QuickBooks bundle, you have to click on the gear menu and then click on the products and services. From there, you have to click new and then bundle, and then enter a name for the bundle and continue on the form. So as you can see, we have to click on this gear button. We have to click on products and services. And within products and services, we can either choose we can choose any sort of option. So as you can see inventory, you can see service, non-inventory, and bundle. So we'll select bundle. For the bundle, we can keep any sort of name. So for example, laptop with backpack. That's a bundle. You can see that the sales description is that, let's see, this is a laptop. This is a laptop sold with a bag. Then you can include any sort of items you want and so forth. So yeah, and you can save it and move on. So for example, we don't have the bag right now, so we can just write down laptop. You just write down laptop, and we can type down bag. And then we can save and close. So laptop with bag has been saved and it'll be in our records. So that is how to add a bundle. And finally, for the final feature that I enjoyed in QuickBooks is purchase orders. Purchase orders refers to a document which you send to your vendor or supplier to request items or services, and it specifies what you want to buy. So what are the benefits of purchase orders? For purchase orders, it provides a clear instruction to vendors and it reduces the errors and miscommunication. So when you're writing a purchase order manually, sometimes your handwriting might be bad or sometimes the vendor might not understand the language on the paper. So they might understand a certain language better than one. That can create miscommunications or they can misinterpret what the meaning of the entire purchase order is. That can create more errors for the business. So purchase orders in QuickBooks helps reduce those errors and miscommunication. Secondly, it keeps a record of what you have ordered before and the items that you have been received or billed for. And QuickBooks can update inventory levels automatically, which saves times for a manual entry for users. So yeah. So how do you create a purchase order? Simply click on new and then click on purchase order. Choose from a supplier and fill out the form. So I'll be showing it. Click on new, click on purchase orders right here. And then you can choose the supplier which you want to go for. For example, I will choose Hawks Courier. As you can see, there's the mailing address, there's my shipping address, ship to, let's say we ship this purchase order to Hank Paulson. Over here we can put the email. So let's say we put hank.courier@gmail.com. And then we can select what you want to ship from, the category, the item of it. So let's say it is freight and delivery. The amount, let's put it at $40. The HST, which would be HST Ontario 13. And then so forth, we can add the item details and whatnot. We can save and close this. which would record our purchase order. As you can see, it says purchase order 1001 saved. And that would be the end of purchase orders. Thank you so much for listening. And honestly, in conclusion, I find QuickBooks a very interesting and fun tool. It is definitely the future of accounting softwares, and it helps me in so many ways. As in the future, if I ever have to start a business, I can see myself using QuickBooks daily itself. They're convenient, and the best part is that their user interface is so friendly. Uh, a, it is really much a good time to have with it. As you can see, the final slide includes references. So majority of the references came from the YouTube videos that I was provided, and the PDFs of each chapter. Thank you so much, and have a great day.